Welcome to the Slash Istanbul podcast. I'm your host, Aykut İbrişim, and today joining us, Mr. Stefan Klestil. Welcome, Mr. Stefan. How are you today?
Thanks. I'm fantastic. Just had a great panel with Barbaros Özbugutu, who's obviously a legendary fintech founder here in Turkey. We were lucky enough to back him as first investors and go through the whole roller coaster together. So it's beautiful to be together on stage with him. We have co-invested already in our next one together, and it's just wonderful. It's a good feeling.
It's great to hear that from your perspective. Everything feels really great and exciting. I know that Turkish FinTech ecosystem is thriving amazingly, and all over the world, many new startups are coming, especially FinTech. Gaming and AI, I know maybe we have a lot of things to talk, but first I just wanted to ask, as a general partner of Speedinvest, who you are just investing in Turkey and you're just seeing outside of Turkey and a broader system, what you see in Turkey right now, how you see Turkey, startup ecosystem and investments?
Just to take a step back, I mean, as Speedinvest, we've grown a lot. We now cover all of Europe and Africa, Middle East, which is a bit unusual for a European VC. We have a dedicated team and fund for Africa and Middle East. Turkey is always in between everything, right?
This is something quite interesting.
You could obviously positively say Turkey is always in any definition of Europe or Middle East in the wider context. But I think Turkey in and of itself is a massive ecosystem, right? So, and nobody needs to explain that anymore. There's been outsized breakout companies in tech. There's obviously been, let's not forget about Turkish entrepreneurs everywhere in the world having built amazing businesses. And I find that actually an aspect, I've never discussed this really, but I find that sort of the Turkish diaspora is still very connected with Turkey. It's a strong connection, and it's maybe the language, and that's incredibly important. So I would say for me, when I talk about Turkish tech, it's not just about Turkey. It's actually really about Turkish entrepreneurs everywhere in the world, because they do inspire people around here, and some come back, and some become investors. No, it's great. Look, we exited Iyzico in 2018. We probably sold too early, to be honest. Happens. Looking at like how incredibly successful this company is, I keep telling people that have not invested in Turkey that Iyzico now is making 750 million revenue, 250 million profit. I mean, that's what you can build here. Yeah. There was a bit of M&A involved, so it was not entirely organic, but still, that's what you can build here, standalone, Turkey only. So it is a market worth going for sure. There were a few years where not much happened, not much international interest. It's changing right now. It seems like, with QED doing Meet Us, which is great. We're hoping, of course, a few more rounds like this. Certainly, we continue to look at the Turkish market. I think there is a great opportunity, not just in pre-seed seed, but also in slightly, we call it early growth, to help entrepreneurs that made it to, let's say, roughly 10 million or so top line, to take the next expansion. And they are struggling to find tier one international growth capital. And so we certainly want to be among the ones coming in, and we're looking at targets. Not least to forget the possibility of Turkey has a very deep, obviously development market and development talent to go abroad. There is no reason why Turkish companies shouldn't be able to go to Europe, like Ilker did with United Payments, going to Italy and other places, or going to Middle East the other way, or both. Clearly, the talent pool is uncomparable to anything, let's say in GCC or other markets. So So I think Turkish entrepreneurs have a shot at building something really big beyond Turkey.
This is a great topic, I guess. Thank you so much for bringing this up. This is the third round here we are just recording, and everybody who just come and join to my podcast, everybody says that Turkey should go outside from their perspective and work with other countries. But what do you think? Something stopped the investors, or something stopped the startup guys, I guess. I don't know what it is. How you see that? Why they are just having that lack of maybe courage, maybe potential? I don't know. Something has just stopped them.
Well, I think we need to distinguish now between different topics. So I'm fintech mostly, but if you look at B2B, hardcore B2B tech, there are a lot of examples of Turkish entrepreneurs either starting in the US or Europe, or starting here and then going US and Europe, that are very, very successful. There are not many cases. So that works. I think that bridge into the US in particular works a lot. Other markets are not yet so much tested. But I'm also a big fan of M&A. I think, especially in the regulated space, there might be many situations where it's a lot smarter to combine forces with a regulated entity in another country than trying to apply for the license yourself. It takes forever. Obviously, regulators are, at the end of the day, also political, always in some way. And so it's not easy for an external startup to actually get in there. So I'm a huge fan of M&A, and we are starting to see players, across markets like Egypt, Saudi Arabia, Pakistan, sort of North Africa, combining forces. And I think Turkish entrepreneurs can play a role in that.
Yeah, there's a huge potential, I guess. And when we say the potential, I just wonder, another question I have is, from your perspective, what defines a truly successful relationship between venture funds and the founder, and startup founders and venture fund? How we can define the successful or great relationship between them? How we can build a one?
Yeah, I mean, it's the story of Speedinvest and Barbaros and Tassin, who is unfortunately not with us anymore, the co-founder of EasyCo, is the perfect example. And I don't mention it because it's a Turkish story. It's truly still, let's say, the best story I have, and I've been backing, and me and my team have been backing 6 unicorns across Europe. And EasyCo certainly was not the biggest exit, but in terms of trusted relationship, and this is what we just talked about on the panel, the importance of trust in successfully scaling tech companies, which seems like a really boring topic to a young founder, but we try to make it a bit more specific why that is important, apart from the shiny products and the shiny AI. Look, we went through massive roller coaster together. When we started, a lot. Turkey changed a lot in those years, and it scared off a lot of international investors. Yeah. And so it was always a very hard journey. There were setbacks, but I can say that we really hung in there together. There was a lot of trust. The founders always very quickly told us about the problems. And this is what I always tell founders. You cannot believe how many founders try to first solve the problem. They don't want the investors or the board to know about it. They want to solve it quickly, which typically doesn't work, or even hide them. And that doesn't create trust, right?
That's right.
Certainly with us, you guys can be upfront. We actually appreciate that, and then try to solve it. Typically, we should be equipped to help you get through that situation a lot faster. I think the story has been told many times, but I just love the story when Dave from Vostok Emerging Finance came into EasyCo. I mean, it was right around the time of the attempt at coup. 5 term sheets all went away. It was really horrible.
It is really, really critical bad timing.
And Dave was very cool. I mean, and that is what creates trust. He's like used to markets like this, and he's just said, "Look, let's wait a few days, see how the stock market develops, and then we'll find a solution, some discount that is fair." And we found it, and of course, I mean that's a trustworthy.
It's like a crisis management on steroids. Nobody wants to live something like that probably just once in a lifetime.
So pick your VC well, and don't only go for the valuation. Right.
Great. That's really great. So you just mentioned, I don't have it on my question list. You just mentioned that you had the chance to work with 6 unicorns. What do you think? What is their similar points? What makes? I'm just thinking about the exact feeling of it, but when you just look at the 6 of them, is there any same patterns, same moments, same team styles? I don't know, but is there any pattern there?
Unfortunately, no. I don't see them. And I know there's VCs out there, very successful VCs, that believe they have a pattern recognition. I guess I'm honest enough to say if I compare those 6, they're all very different. And I mean, it starts, for instance, you invest, and neither the founder nor the investor at the beginning really know how profitable and how big that market is really going to be, right? You just don't know if it's a new market. And of course, of those 6, there's a few, especially in crypto. I mean, these markets are so profitable that obviously you are much less dependent on funding. And so you as an entrepreneur have a much more liberty to act the way you want. So that's one thing. The other one is, look, we have very successful investments where the original founders turned out to be not the right people to go from 10 million to 100 million and more revenue, right? We were very in many cases that puts the company out of business. Because founders are rarely, especially young founders, so self-aware and mature that they realize, okay, I'm not the right person anymore. I'm going to work with my board to find the right replacement. And it doesn't mean I have to go out, but I can maybe then focus on the things I love. And so we have a situation where that was the case, and they actually made it to unicorn. But by the way, all these unicorns are making between 100 and 500 million revenue, and most of them are profitable. I say this because unicorn obviously has become a bit of a sort of a bad word.
I know.
So these are real companies creating thousands of jobs and including also emerging markets, one in Africa, and so I do not see a pattern. Clearly, we see these generic patterns that you always have to have. Extremely ambitious, hungry founders that see something that nobody else is seeing and that are just very resilient and don't take no for an answer. Japanese saying, fall down 7 times, getting back up 8 times, right? So there is that founder persona that, of course, we're all looking for. But that's one element only. There's many other things to it, and you cannot diligence everything up front. Which is why I think there's still some time ahead until AI overtakes us VCs to make the investment decision.
Yeah, I was just going to come to that point too. Throughout that journey, what do you see as a transformative thing? Because everybody's just talking about the AI right now. Something is good, something is terrifying, something is really helpful. But how do you see that in your investment space? How you can feel that? What are the best ways to use the AI?
Yes.
Picking the startups, picking the right people, right teams. I don't know how you use it and what you can suggest.
I certainly don't have the answer. What I see is in our portfolio of scale-ups, so companies that do more than 10 or 50 million, everybody is introducing AI, of course, and they have the capital, they have the budgets to bring in top people to actually apply AI to as many use cases internally as possible, obviously from lead generation all the way to customer service. So everybody is doing that. There's huge efficiencies without any doubt. So that's sort of table stakes. when it comes to new investments, AI native companies, it's much more difficult. I mean, there's so many. Like, how do you pick the right ones?
Yeah.
I mean, one indicator that is driving valuations right now is obviously the scale to 10 or 100 million revenue. It's just mind-boggling, some of these companies. Honestly, it's incredible.
Amazing.
But not all AI native companies grow like that. It's still the minority, right?
Yeah.
So let's see. I mean, the verdict is out. We're obviously looking at a lot of it. There's again this sense of urgency and competition.
Yeah. Pushing everybody
We've been missing, so
Yeah.
we love it. It's
Yeah.
great. In the last few years, we're a lot about restructuring and actually doing much less investment. So there's excitement again, which is fantastic. But we're all trying to figure it out, and don't believe anyone that says they've figured it out. There's obviously all
just
these
because
smart
it's
VCs.
AI.
I don't believe so. So but it's exciting. And certainly there is vertical AI in fintech, of course. One thing I would say, AI and fintech, the question becomes eventually, what is your moat as a fintech? Ironically, the one moat that will always be around, at least for the next 10 years, is regulation.
Yeah.
So
Which is very
obviously,
tough.
the regulator typically has been the bad person from the eyes of the tech founder and the VC. We obviously have been going through the journey, with N26 and with Tide and Bitpanda. They're obviously all regulated. You have to build regulation into your core
Super
from
tense.
the beginning. But funny enough, with AI, if you really think it radically to the end, that license is going to be your moat.
Yeah, it's going to be a fantastic world, I guess, because my previous background was in the finance too. We were just changing how the digital, communication just affects the relationship between the customers and the company, and we were just still dealing with it. Even we were just a communication department and digital department, all these regulations were just pouring all over us. But right now, I can think about how it's just changing and shaping the ecosystem. Again, fintech is super exciting. I'm super lucky that having you today and listening to you and listening your perspective. Before we just close, one last question to you, Mr. Stefan.
Sure.
What can you suggest to new startup founders to make them prepare for this journey? Because this is a tough journey. Yeah. I have some students here and they're just listening amazing people and getting in touch with them. But this is always showing like it's a beautiful life being a startup founder, but it's a tough one. What you can suggest to new people who are just entering this space?
Well, I have 4 boys, right?
Beautiful.
And one has already started something. And so, I'm obviously all for people building, their own job. It has the advantage. There's so many people out there in the world that are unhappy at their job because of their boss, typically. So,
as usual.
So if you and it's a trade-off, right? So if you build your own company, you're the boss. But that, of course, comes with massive responsibility, which is typically under-indexed. So I think that's the conversation. But then also when you're 21, 22, 23, just build it. Just do it. Be scrappy. Build it. I mean, I keep telling my boys, there's never been a better time to build now with AI, right? Obviously. There is much less dependency on venture capital these days. You can build companies. Look, I mean, you don't have to become a unicorn. You can actually build a very nice company for yourself that is profitable. And you have a team, and you can actually then create the working environment you are looking for, and that's a very nice feeling when you have people working for you that actually enjoy working for you. It's a beautiful feeling, and maybe that's already quite a lot, right? You don't have to be greedy and go for the unicorn. I'm not sure we would be the right investors for that, but. There's plenty of successful companies you can build without VC. It's fun.
Beautiful.
Yes.
Mr. Stefan, thank you so much for joining us today and having the time for us. Thank you.
Thanks a lot.
Thank you so much.